Hey, what's up everybody? Monday, July 8th. Just finished the new issue of MMT Trader. I sent that out. If you want to get a copy, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. Had a great July 4th weekend. Went fishing. Caught a bunch of fish, including a 7-pound fluke. Was very happy with that. And it made a really nice dinner. Markets. Let's talk markets. You know, headlines now, I've been noticing people starting to wonder about that rate cut at the end of this month. You know, we got a strong job report last Friday. Payrolls were way higher than expected. A good gain in hourly earnings. So there's a question mark out there as to whether or not we're going to see that rate cut. I personally think that is going to happen. If you look at the implied probability in Fed fund futures, that is 93% that we will see a 25 basis point rate cut on July 31st. Now that's down a little bit from 98%, but I think 93% is a high enough level that Jerome Powell is going to say, yeah, we're going to do what the market says we ought to do. And this is my reading of Jay Powell. I think he's a guy who follows the market. I don't think he really understands the Fed's role very well as a monopoly price setter via interest rate policy. And I also think he has made himself very susceptible to criticism from Trump. I think he caves into that. But most important, I think Powell and the rest of those guys on the FOMC look at the markets as to what they should do. And a 93% implied probability, if it stays up at that level, maybe it'll come down between now and the end of July, I think that's enough to cause them to make that rate cut. Now, remember, all of this, and when I'm talking about you know, rates and yields and bonds, it has all been a function of the debt ceiling going back to March. This huge rally that we had in the bond market and the fall in yields has been as a result of the debt ceiling, which has created this kind of artificial shortage in treasuries, which is a tier 1 asset and an asset that the banks must own if they are to meet regulatory requirements and, more importantly, pass stress tests. And by the way, those stress tests have just been concluded, and the big banks at least passed them with flying colors. As a matter of fact, the Fed said, hey, you guys can go ahead and pay dividends or do stock buybacks because you are well capitalized, if not over capitalized. As far as the markets are concerned, we have, remember last week we made a new all-time high. We hit 3,000, at least the S&P futures. I think the high in the S&P index was like 29.95. We're getting a little bit of a pullback now. We are entering into that period where, as I described last week, we have that negative technical monetary condition which can create some headwind for the market. Now, I get into detail on this in the report, MMT Trader. And again, if you want to read what I have to say, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. But we are in that window until August 6th. And if we get that Fed rate cut at the end of the month, that could I guess hasten the process to, we got August, we got September, which are big fiscal months. As far as the debt ceiling is concerned, there has been no progress on this from Congress. Next month in August, they take the August recess. That's a pretty long break. I think it might be something like 6 weeks or something like that, so nothing's going to get done. Doubtful that anything's going to get done. So it's really going to be, you know, critical time when they come back to get that debt ceiling. And I will say this, I will go out on record saying this. If they raise the debt ceiling, the bond rally is over, okay? Because this is all technical. It is all artificial to the extent that the debt ceiling has created this shortage in tier 1 assets, namely treasuries. Banks have to have them. I've been through the whole shebang. You should understand this by now. So we are seeing, I think, the first inkling, the first sign of some upward resistance. But I have to say, if you look at sentiment, and I like to look at the American Association of Individual Investors, their weekly survey, bullish sentiment is still low, bearish sentiment is above average, and neutral sentiment is still way above average. Now, the neutrals have been, in high numbers since the beginning of this year. And I think that's the key thing to look at. But it's also instructive that right now, after making not just a new all-time high, but hitting that 3,000 mark on the S&P, or coming very close, that you have an elevated level of bears and a below normal level of bulls. I think that's very interesting. And it says a lot. So you got to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Read what I say. But there is going to be a lot of action between now and the end of the fiscal year, which is September 30th. And I would say, what are we today? July 8th. The next 3 weeks, the next 4 weeks could be very volatile, choppy, difficult for most people to manage or understand. They're going to get chopped up to ribbons, especially if they're short-term traders. But we got to figure it out. We know how to play it. That's the key. Everyone else is going to be chasing the market up. They're going to be chasing the market down, calling new trends when new trends are not happening, saying old trends are ending when that's not happening. It's going to be very, very confusing. Believe me, we got to figure it out. So again, the new issue of MMT Trader is out. Go out, sign up for a 30-day free trial, read what I have to say. All these things are knowable. It's about understanding the monetary situation, the fiscal situation, knowing how people are going to react based on the fact that they don't understand these things. It's all very predictable. Like I said in a prior email, this is science. This is like physics. A force applied to an object creates a reaction. Same thing here. The force consists of these massive flows of money between the government and the banking system or the economy, and that drives the markets. And if you know how those things move and what the effects are, those are tradable, that's tradable knowledge. And I don't need to spend $20 million to stick my computer next to the computers at the CME out there in Illinois. I don't need to do that. That's goofy, that's crazy. That's like overkill. That's like massive amounts of investment for tiny fractions of return. When all you need is this: understanding, knowledge, information, and mental game. Got it all here. All right, everybody, pitbulleconomics.com. Go there, sign up for a 30-day free trial of MMT Trader. And all my courses are on there too. The Forex course, Understanding the Daily Treasury Statement, and MMT Value Stock Selection course. See everybody tomorrow. Bye-bye.